Hi guys, and welcome to our video for today, the 7th of January 2026. So let's go through the watch list, what is on it and what is next for these stocks. So starting with NVVE, so we're looking at this beginning on the 5-minute time frame for a day trade, and what I'd do is converge all this price action into a falling wedge with 3 touches per side of it to know it's a mature enough consolidation. It's been consolidating for a long enough period before a premature breakout. And then what I'm also going to wait for here is just a push over 4.1 for an entry. And if it breaks over 4.1 for a day trade, you can expect it to run at least 8% for a take profit, and your stop loss can match. Size on NVVE, until then, I'll just avoid it, as it's just consolidating in a really messy range, basically from $4 to all the way down here at 3.1. However, if we lose, in my opinion, I'm going to move this up 2.85. If you lose 2.85, let's call it 2.8. If we lose 2.8 in this, I do think we are done. And there's a big chance we trickle down even further beyond the 200 EMA and 200 MA and back to where we came from, all the way down at 2.15. So I wouldn't want to be in this if it were to drop beneath 2.8. So you can apply that for your stop loss if you need. And then getting rid of this now and going to the 4-hour time frame if you want to hold this overnight. So zooming in a bit more. Personally, if I'd want to hold this for a couple more days or look for an overnight trade, I'd wait for a 4-hour green candle close over 4.1 either by 1:30 p.m. Eastern time today, only in 35 minutes, or by 4 p.m. end of close today, or maybe tomorrow as well. Just basically a 4-hour green candle over 4.1 for an entry and enabling the folding overnight, in my opinion. However, there is going to be resistance here with a 60 EMA for a death cross retest at 4.85. But it shouldn't be an issue, as it should generally trend back up to 5.35 for a main profit-taking area. So maybe you can de-risk some at 4.85 and sell at 5.35 and leave some to run after, leaving for a nice plus 27, basically 25 to 30% move, essentially. So that's in the 4-hour time frame, and until we get the 4-hour candle close, I wouldn't hold this one overnight. Going on the daily time frame, and zooming in a bit more, for more of a longer swing trade, perhaps into next week, I would basically wait for a daily close over 4.1, because currently it just looks like we're getting rejected from this orange line, which is the Bollinger Band Center, and once you're above the Bollinger Band Center, you're 65% more likely to remain above the Bollinger Band Center, and until you close above it, you're 65% more likely to get rejected from this area, which is currently at 3.683, which I'll probably just round up to 3.7 to be honest. So we not only that, you've got a strong top wick now against 4.1, the one-day resistance, so you can close over this orange line and still be rejecting from this 4.1 resistance. So I'd wait for a swing trade on this by waiting for a daily close over 4.1 for an entry, and I'd expect it to come up towards 5.35 and further up, but I still have 5.35 as a main profit-taking area on NVVE. And remember, if it loses that 2.8 level, all is done on this one. So that's NVVE. So going on to LUCY next, beginning with the 5-minute time frame. So this one, there's not really too much volume in it as the candles are small, and there's not really strong noticeable movement candles in the time frame. However, if you go on the 1-minute time frame, there's still candles generally over 80,000 in volume. However, we've started to get a bit beneath that now over the past few minutes, so volume could be starting to dry out completely. And because of that, I would wait for a push over 2.25 for an entry. Seems like it's a mile off, but don't be fooled. It's still a fair enough band of 20-30% between each support and resistance, and wait for a push over 2.25 for an entry in that one. And I expect it to run no more than 5% due to the low volume this one has, and I would avoid it otherwise. However, if we lose the 60 EMA and this 1.5 area here, I do think we're done on this one. And again, it's coming back down to where it came from, which is all the way down at 1.15 sort of area. So if we lose 1.5, I wouldn't want to be in this. So you can maybe apply a stop loss based on that information there. And then go into the 4-hour time frame. I'm going to have a look here. It's not very good. We may have to turn extended hours on to help us for the data. Yeah, we need a 4-hour green candle close over, I'll say 1.8 to be honest, just to engulf some of this support here. It's currently just, it's basically a spinning top, isn't it? And ultimately reflects indecision, uncertainty, and no clear direction. So I'd wait for a 4-hour green candle close over 1.8 for a clear green candle over the support / resistance here at 1.75 for greater direction and greater trend towards 2.25. So that's what I'd wait for there. And then the daily time frame, this isn't applicable for a swing trade at all in my opinion, because you're getting rejected here straight away for $2 psychological number. Not only that, but the 200 simple moving average, and also even if you were to close above 2.25 resistance on the daily, you've got the 200 EMA even further up for another death cross retest at 2.45 essentially. So there's too many resistances, too many chances for you to get ahead. and too many ways of getting in the way, really. So I'd avoid that one for a swing trade, but for a day trade it looks okay, but I don't think it has the volume. So LUCY doesn't look too great, to be honest. And finishing up, ASBP. So this one's pretty clear. Basically, strong rejection from 0.15. Every minute it spends beneath 0.15 is every minute 0.15 becomes stronger, which is good because once it breaks it, it should be a strong enough break to catalyze into a first target. Of my opinion, let me just measure it out. I would say 6%. 6% first target. And if you'd like to know how much you would need to enter with to attain your daily goal in one trade, you can find us. Link in the video description and in the Twitter bio. So yeah, basically push over 0.15 for an entry because it's in a falling wedge formation here, and it's been a pretty simple and clear consolidation beneath for decent enough time. And that's for a day trade. However, if we were to lose 0.12, in my opinion, I do think we're done in this one, and we're coming back down to where we came from. So I wouldn't want to be in this one beneath 0.12, to be honest. Then going to the 4-hour time frame. So if we want to hold this overnight and look for maybe a 1 to 2 day sort of swing trade, we need to extend hours on to make it a bit easier to see. And we need to get above 0.16 really. You want a clear green candle over 0.16 to continue the trend back up. So it looks like we just pumped up, broke over 0.15, slightly missed 0.2 and just rejected straight from it, the resistance here. And a complete rejection following with the clear red candle. So to continue this trend, I'm going to put a little faint line in here, and we need to get a 4-hour candle close corrected of 0.165 for continuation in towards 0.2. So I would avoid this overnight or for a swing trade until it has a 4-hour candle close, green candle close over 0.165. Then finishing up here on the daily time frame, zooming in even further. So again, a daily close not only over 0.165 but over 0.2 would be really good in this because you're engulfing a death cross retest, the 60 EMA, and also getting over the 0.2 one-day resistance. And it should continue up towards 0.25 for a gap fill. Until then, it's just going to reject off the 60 EMA and the one-day resistance. So hopefully you can use this to your advantage and apply it into your trades. If not, we do plenty of alerts. We have 1, 2, 3, 4 day traders, 4 options trades, and 3 different swing traders as well. So if you want to learn more about that, also alongside seminars, trade reviews, live trading, you can find us, link in the video description and in the Twitter bio. So thanks guys, and catch you all later.